Sanctions have been imposed on 82 individuals and 29 companies. German payment provider Wirecard went bankrupt on Tuesday.
Russia has launched an unprecedented disinformation campaign against...
Billions of dollars have been found in various offshore accounts.
Welcome to Integrity Insights, the Berlin Risk Podcast. Hello, dear Integrity Insights listeners. I hope everyone enjoyed the holiday season. And while we were all getting ready to celebrate the end of 2024, there was an important development in Europe's AML CFT landscape, namely an update to the transfer of funds regulation released by the European Banking Authority, which took effect on December 30, 2024. This update specifies the informations that are required to accompany every crypto transfer, regardless of their amount, and the regulation is applicable to all 27 member states of the European Union. To discuss this new regulation, I sat down with Lana Schwartzman, who is the head of regulatory and compliance at Notabene, a US-based crypto's pre-transaction decision-making platform, which specializes in helping crypto businesses to comply with the travel rule. This makes Lana the ideal interview partner on this subject. So let's just jump straight into our conversation. Hi, Lana. Welcome on the podcast.
Hi, I'm so excited to be here. Thank you for having me.
Well, thank you for coming. Can you first tell our listeners a little bit about yourself, like about your background and what you do at the moment?
Sure. My name is Lana Schwartzman. I am head of regulatory and compliance at a company called Notabene. And Notabene specializes in travel rule, but essentially is a crypto pre-transaction authorization and decision-making company for transactions. And as mentioned, the heart of it is essentially travel rule compliance. Personally, I've been in compliance for 20 years. 13 of it has been in crypto compliance. And I've been a chief compliance officer for 2 different crypto companies by now. So I'm one of the OGs in this space, I would say, for sure. And I got to do some cool things back in the day, such as mining my own Bitcoin back when you could still do it with a supercomputer at home. So that was fun.
That's really interesting. And do you actually still use crypto, like in your daily life?
No, in my daily life right now, I'm just huddling. I'm using it as an investment.
Understood. And you mentioned the travel rule regulation, which we will discuss obviously in detail in this podcast. But before we do that, I just wanted to ask you a general question, like how widespread would you say the use of crypto is for money laundering?
The age-old question. So while crypto is often portrayed as a haven for criminals, studies from Chainalysis, TRM, and Elliptic all show that illicit activity accounts for less than 1% of the overall crypto transactions. Chainalysis recently pointed out that in 2023, illicit cryptocurrency addresses sent approximately 22 billion worth of digital assets to various services, which is a decrease from, I think it was 31 billion record that they had in 2022. And by the way, if wondering about fiat, traditional fiat currencies are more commonly used in illicit financial activities. The United Nations estimates that annually between 2 and 5% of the global GDP, which is approximately 80 billion to 2 trillion, is laundered through fiat currencies. So I know we're all quick to point fingers at crypto, but when you look at the grand scheme of things, I think fiat is still preferred.
No, that's really interesting statistics. But we will still stick to crypto in this conversation. And even if you say that there is less money laundering actually taking place, like the money laundering that is actually happening in this space, how does it actually work in simple terms? So how do the criminals use cryptocurrency to launder funds?
Yeah, that's a good question. And I would certainly leave this question to my friends at the various blockchain analytics companies, but I can tell you from my experience as a former chief compliance officer, as mentioned, that I think criminals use a variety of techniques to obfuscate the origin of funds. Um, of course, I would hope that is obvious, but most common would be mixers and tumblers, where they they basically blend funds from multiple sources to hide their origin. Then there's chain hopping, which would move funds between different blockchains. And then you have privacy coins, where using cryptocurrencies like Monero that are specifically designed to hide transaction detail. And then you may have the typical layering through VASPs, where you are simply depositing and withdrawing through virtual asset service providers to obscure the source of funds, basically.
And is it then, if you use one of those techniques, or even like all of them, is it then still possible for investigators to actually track back the original source, or is it then completely impossible?
I don't think it's impossible, because if it was impossible, we wouldn't have such success with some of the cases that have been solved. I think, criminals, they get smart, and, they try to figure out the next best way to do this. But I have faith in our friends at blockchain analytics companies. I think the sophistication of what they do behind the scenes, and I guess whatever their secret sauce is, it works quite well. And I think that's the beauty of crypto and blockchain, is that everything is transparent. So it's just a way of figuring out how we can get to the source.
Mm. But let's say those groups or those criminals that actually manage to somehow obfuscate the source of this crypto, and then want to actually use the money. We had on a recent podcast episode, we talked about like Russian ransomware groups that accept payments with crypto, and then obviously want to use this to buy whatever assets they are interested in. Then I guess these individuals, once they use these obfuscation techniques, they will still need to convert this crypto to fiat, right? At some point.
Yeah. I think, simply put, in most cases, you're right. They do need to convert crypto into fiat to fully kind of integrate into the traditional financial system. However, this is getting harder as banks and other financial institutions are enhancing their AML controls. And then plus you have, one of my favorite regulations, travel regulations in place as well, which is something that we're going to talk about as well, which I think helps with this.
Mm-hmm. And before we get into the travel rule itself, I was wondering, is there some sort of a global regulatory framework that travel rule is just a part of, or is the travel rule really like the only regulation in the space?
No, of course not. There are all sorts of kind of regulations depending on the various jurisdictions, but generally you're looking at regulations around your AML and CFT and sanctions, which kind of govern the anti-money laundering risk that can happen with crypto, with fiat, with anything. It's cross-board, I would say. Travel rule happens to be one of the newer regulations within the scope of AML, essentially.
And so what is it?
So my favorite topic now. Okay, so the crypto travel rule is a regulatory framework that was initiated by the Financial Action Task Force, known as FATF, in 2019. And that requires virtual asset service providers to share specific transaction information between the originator and the beneficiary of the transaction to enhance anti-money laundering and counter-terrorist financing efforts. It's essentially an adaptation of the wire transfer rule, which has been a cornerstone in preventing money laundering and illicit activity in traditional finance for decades, and ensuring the secure and compliant transfers of funds globally. Now, before travel rule, the issue has been that little to no checks were performed when a VASP's customer would send a transaction to a counterparty, and therefore the originating VASP had very little to no visibility on who they were transacting with on the other side. This always increased that inherent counterparty risk when it comes to sanctions, illicit transactions, and high risk activity. Now, when implemented correctly, this regulation is revolutionary because for the first time in crypto history, we have the ability to prevent potential illicit and sanctioned transactions from reaching the VASP before they're even created on the blockchain. And this gives VASPs the power to reject such transactions, thereby reducing the overall risk exposure to sanctions. Brilliant, right? I mean, let me
Beautiful.
repeat that we have the ability to stop potential illicit transfers before they are created on the blockchain. And by the way, the main goal of travel rule is not just to transmit this information, but to do something with it, meaning file a suspicious activity report if there is a suspicious transaction.
And the travel rule, as far as I understand, it was first kind of put forward by the Financial Action Task Force in 2019, which is not, this is not a binding sort of regulation. It was then up to the individual, I don't know, countries or
Correct.
entities such as the European Union to implement it.
Correct. And the 2019 mark was more so for the crypto community. The concept of travel rule, some call it the transfer of funds regulation, transmittal of funds regulation, depending on the jurisdiction, and has different names. So it's been around for quite some time. In the US, for example, this goes back to 1999, as a matter of fact. So it really depends, but it wasn't for crypto, right? What FATF did was they put it for crypto, basically.
Mm-hmm. And since obviously we are particularly interested in Europe, how has the rule been implemented in the European Union?
Yeah, so this for sure has been fully entrenched in the EU, especially this year, given the upcoming deadline to comply with the transfer of funds regulation, also known as the TFR, that goes into force on December 30th. And this will be applicable to all 27 member states in the EU and EEA. And it sets uniform travel rule regulation for all. And then, aside from the transfer of funds regulation, you also have the accompanying European Banking Authority travel rule guidelines as well to follow. And if, like my team, you've delved into these regulations in exhaustive detail, you'll find that they're highly prescriptive as they provide CASPs with clear and specific instructions on how to achieve full compliance with travel rule.
You have already mentioned. You just mentioned CASPs. I think you
Yeah,
mentioned before VASPs.
CASPs.
Can
Yeah.
you explain the difference?
Yeah, it's a minor difference. So the FATF term is VASP, which stands for Virtual Asset Service Providers. In the EU, it's CASP, which stands for Crypto Asset Service Providers. I don't recall the nauseating details in the definition off the top of my head, to be honest with you, but it surely is quickly available online. It's a minor differences in what constitutes a CASP versus a VASP. And other
Mm-hmm.
jurisdictions also, they'll have, some call it DASPs, Digital Asset Service Providers. I've heard that one as well. Essentially, it's a broader definition of what would constitute as a player in the industry. Essentially, it comes down to differences in if you're custodying or not, and if you're transmitting a transaction or not. Those are the
Okay.
general kind of. Um,
And so with the new amendments to the travel rule taking effect, you said at the end of December this year in the European Union, what are the VASPs actually obliged to do by the end
yeah,
of the year?
so there's a lot in the TFR and the EBA guidelines, but thankfully Notabene breaks it all down on our website with different guides, and we also have launched an EU deep dive course in addition to our existing travel rule certification. But when we think about the elements, I tend to break them down into requirements for around the scope of information, and then requirements around how to handle missing information, where in the EU you have 3 working days to provide this information and 5 working days if outside of the EU. Then requirements for reporting of non-compliance. And this is like your tattletaling on CASPs that do not basically respond to you and provide missing information. And lastly, requirements around self-hosted wallet, where the obligations vary based on the transaction amount. So if it's over or below 1,000 euros, and whether the wallet owner is a customer of the CASP or not. Also, I want to point out that with the requirements for providing missing information and the reporting of non-compliance, that is all because CASPs should be fully responding to travel rule transactions. Regulators want to see the effectiveness of travel rule, which in essence means it is no longer okay to just send a transaction and say, hey, I, as a CASP, am now travel rule compliant because I just sent the transaction. This needs to be two-way. We need to be responding. We need to be effective at using travel rule for its intended purpose.
But so if I understand this correctly, the main kind of the key element is that the VASPs are they always have to identify the ultimate or the beneficiary of the transactions on both end. Is
so
that correct?
The originator and the beneficiary of the transactions, yes.
And this is also the case when it comes to unhosted wallets.
Yeah, so
under 1,000 euros.
Under that, so great question. So to understand the obligation requirements for an hosted wallet, one really has to look at the TFR language and the EBA travel rule guidelines, and also the money laundering terrorist financing guidelines by the EBA holistically, all three of these. So specifically for transactions above 1,000 euro, where the wallet owner is a CASP customer, the TFR requires CASPs to verify that the customer truly owns or controls the wallet. The EBA outlines various verification methods, mandating the use of one primary method and additional methods if the primary one is unreliable. So we at Notabene support 4 different methods. You have a cryptographic signature proof, and this is where the CASP customers, they can seamlessly and securely sign a message using their private keys, enabling verification of wallet ownership via their blockchain address. So think of the analogy of when you buy something and you have like checkout with PayPal button, for example, right? And you click that PayPal button, you log into your PayPal, but in this case, let's say it would be your MetaMask wallet, right? You choose your account and then you complete the transaction. So similarly, a CASP customer would go to, let's say, a withdrawal screen. They would select the asset, enter the address and the amount. They would check that this wallet belongs to them. They connect to MetaMask, and again, MetaMask is one of the many, but I'm using that as an example, and they sign for verification and it's done. It sounds longer than it is, but I promise you the whole process takes seconds when you actually do it. And then you have micro transactions, aka like Satoshi test, basically, where CASP customers confirm wallet control by sending a specified amount of cryptocurrency within a set time frame. Then you have screenshots, which is less robust than the other ones that I've mentioned. And this is the option for ownership proof, but it is not accepted in certain EU states. And as you guys are actually in Germany, BaFin was one of the ones in their guidelines that said we do not accept screenshot method for unhosted wallets. They don't consider it as ownership proof. I commend them for being bold and coming out and saying that. I fully agree with it. And the last and fourth method that we support is a checkbox attestation, which is like a self-declaration, basically. And this is where a CASP customer would self-declare the ownership of the wallet address as a last resort. Now, personally, as a former chief compliance officer, I don't like the screenshot method, and I don't like the checkbox attestation. I think those are weak. They're weak controls for the industry, and that's why I commend BaFin for standing up for this. However, from an industry perspective, that is something that the industry has been requiring and asking for, so we fully support it. So we basically support all EVM compatible blockchains, including Ethereum and others such as Polygon and Binance Smart Chain. And while Bitcoin and Solana are not EVM compatible, they're also supported in our platform. And if anyone doesn't know, EVM compatible blockchains are blockchain platforms that support and are compatible with the Ethereum virtual machine. That's what that stands for.
And Lana, since you already mentioned BaFin, the German financial regulator, everything concerning BaFin is always it's an interesting discussion. But which one of these four verification methods they actually approve of, if they don't like the screenshot?
I did not see what they approved. They just said what they do not like.
Okay.
I think most regulators tend to be as neutral as possible when it comes to, generally speaking, to technology. So I haven't seen what they would prefer. I personally think, again, this is not me answering on behalf of BaFin. This is my personal opinion. I think the most secure and the easiest is the cryptographic signature proofs.
I find it's really fascinating how many ways there are to identify that you own a crypto account. But what I really wonder, as I listen to you, is obviously all these cyber criminals who want to launder funds through cryptocurrency. They don't want their names to be identified, and is it maybe possible then to just simply use the infrastructure outside of the European Union, where the regulation is perhaps not as strict, to kind of maintain your anonymity?
So interesting fact, actually. So kind of what you're alluding to, I think, sometimes is known as the sunrise issue, and that's when different regulations come on in different jurisdictions, right? They're not all on like at the same time, you could say. And it's a common challenge and an issue. And this was more so a challenge and an issue back in, let's say, 2019, when in the crypto space, we didn't exactly know how we were going to be doing travel rule compliance, technically how this would have to be figured out, and how to think about this. And similarly, regulators as well, they didn't all have their ducks in a row and put out guidance for travel rule compliance within the crypto industry. However, now we're 5 years later, and this sunrise issue and challenge, in my opinion, is no longer of one. I like to talk about that as we're now at the dawn of travel rule. It's no longer sunrise. And the reason behind this is, for example, as early as this year, in March, I believe it was, FATF came out with a report, and they basically stated that 89% of material jurisdictions already have travel rule regulation either in place or in the process of having it in place. And then since that report, there are so many more jurisdictions that are coming on. Of course, the biggest one being EU. That's a huge chunk of it. Most recently, I think it was maybe a month ago or so, don't quote me on that, South Africa, for example, had their travel regulation come online. Seychelles. I mean, the list goes on and on and on. New Zealand, Australia, again, of either having it in place or it will be in place by the end of the year or in process. So this loophole is really closing in. And then aside from the regulatory angle of having this regulatory pressure, right, of different jurisdictions having travel regulations in place, you're also starting to have counterparty pressure, where counterparties want to see travel rule compliant transactions, and they will not allow the transfers through otherwise. We actually saw this in our last State of Crypto Travel Rule report. It's a report that we do annually. And in there, we had huge numbers where 66% of the surveyed VASPs were not allowing transactions that were not travel rule compliant.
Interesting. I have to say that is a bit of a surprise for me. I didn't realize that this regulation was so widespread globally. I wonder, is there also a way to, or maybe something you've developed internally to measure the effectiveness of this regulation, in terms of combating money laundering through crypto?
Yeah. So internally, we're able to kind of figure out from our population what effectiveness looks like. But I'm curious to actually have this um, qualified and maybe quantified from FATF, from regulators, to have a common definition of what effectiveness looks like. Some of the regulators that I've spoken to and NCAs, they are already going on site. They're already examining for travel rule. They are starting enforcement. Some are just, kind of doing a light touch approach. Fines are going to come a little bit later on. Others that I know, they're already starting to look if there have been SARS, suspicious activity reports, that have been filed, right? So again, if you are seeing this, that the transaction is potentially suspicious, you should be doing something with it. And I think that's a strong indication of the effectiveness of travel rule.
And just one last question. I understand obviously that you don't have any crystal ball, but this regulation has been in place for a while, and now the EU has added these amendments. And you have been in this field for such a long time. How do you see the evolution of the travel rule in the next years to come?
I can only predict so far. If I had a crystal ball and I'd be right all the time, I'd be a lot richer and own a lot more Bitcoin probably. No, but my hunch would be that there will be increased regulatory scrutiny and enforcement, specifically on travel rule, as national regulators are starting to get more pressure from FATF and stressing the importance of this regulation. Enforcement actions around non-compliance will likely rise. Also, I think we may start to see a global harmonization of standards as more and more different jurisdictions have been rolling out travel rule regs and guidelines. As I said before, there will most likely be an increased effort towards harmonizing regulations. And this includes cross-border collaboration to streamline the flow of information between virtual asset service providers, I think, in different countries.
All right. Well, Lana, thank you so much for your time. This is especially now before Christmas. It's a challenging topic, but it's very relevant, especially for us in the European Union. So thank you again for taking the time, and I wish you happy Merry Christmas.
Thank you so much, and happy holidays, everybody.